Ladies and gentlemen, the Canadian dollar is facing some major problems. So we're not going to waste any time. We're going to have a look into the Canadian dollar and what's going on. So here we have Market's new COT feature. So we're going to filter it by currencies and take a look at what the positioning is telling us already. So here we have the Canadian dollar. Market is bearish. The sentiment is bearish. But this is where it gets interesting. The long percentage has been decreased again from 14.51% to 13.99. Then we've got the short percent, which has been increased from 86% from 85.49, which is already, or was already at extremes. Net positioning is very low here with negative 105,000. And again, that's an increase, or actually a decrease on the previous from 93,000. And we can see the change is 12.82. We can also see a similar thing here with the British pound that we will go into in a future video. So if we click into the Canadian dollar, we'll be able to see a little bit more of what's going on. So we can see commercials are still buying the Canadian dollars. However, large speculators and small traders have been decreasing positions. Specifically, large speculators have essentially just been selling this whole time for the past sort of 12 months. And even more interestingly, we can see the open interest did start to creep up towards the end of 2024. But as soon as we hit 2025, we can see that open increase took a massive hit and is continuing to just move to the downside. And again, here we can see the previous COT filings. It's just not good. We've had two months here where we've had additions, where we can see back in January 2025, there was a slight increase in change. And again, in July, there was a slight increase. But that's it. The whole of this year has just been so bearish and full of smart money sellers. So again, using market, we're going to have a look at the economic landscape. So we can see interest rates have been cut, which of course isn't necessarily a bad thing, but we do know as traders that this brings down currencies. So we can see we've gone from 5% back in September of 2023, and we're currently sitting at 2.75%. CPI is just dropping and dropping and dropping. We were at 4% in 2023. We're now sat at 1.7. Unemployment rate ticking up continuously. Now we're not seeing massive spikes in unemployment, but we are seeing that trend to the upside, and we're seeing inflation coming to the downside. Not great. Generally, we like to see the labour market follow the inflation trend. So if inflation's going up, we like to see the labour market going up, and vice versa. So we can see unemployment was at 5.5% back in September of 2023, and we're currently at 6.9% as of August 2025. We can also see the GDP here is negative 0.1, which is extremely poor. The Canadian economy, or the Canadian GDP, is just going up and down and up and down. It's like a sound wave or a roller coaster. It's like, it's ugly. It's not good. Retail sales are doing okay. This is one of the few factors that are actually sort of saving the Canadian dollar a little bit here. So we can see we did have a bounce from negative 1.1 in July 2025 all the way up to positive 1.5 in August. Exports are down. Imports are also down. However, I want to give you a bit of a deeper look. So if we look here on trading economics, we can see the Canadian GDP growth annualized went from 2% all the way down to negative 1.6. So we are seeing contraction in that area. We can see Canadian exports have absolutely plummeted. So we can see we're on a downwards trajectory since the start of the year. So we can see 73.2 down to 69, down to 67.6. April was massive down here at 60k. We are working our way back up. Of course, we've had tariff implications as well, so we can't completely discredit it, but it's still something to pay attention to. And then, of course, here we have the monthly GDP, which had 3 negative months in a row. We finally had a positive one back in July. What's August going to be? Who knows? Now we have the Canadian current account deficit. It's just getting worse. So they're in a massive deficit anyway. We saw a huge issue here of a $20 billion deficit. Actually, a $21.2 billion deficit to be exact. So we can see that's a massive increase from the previous readings. Even when it was already negative throughout the past 2-3 years, this is huge. And of course, the exports are definitely not helping. This is a huge contributor to this current account deficit. And now we have another factor, which is the central bank, or the Bank of Canada. So again, just using market here, we can see the overview and their stance. So we can see the Bank of Canada leans toward a September rate cut amid Q2 GDP contraction and subdued 1.9% inflation. Market weighs trade tensions and domestic resilience ahead of September 17th decision. And again, the current stance is dovish to neutral. We also have a couple of other factors such as foreign capital exiting Canada. So essentially investors are just pulling money away, which of course is depressing the demand for the Canadian dollar. There are a couple of other things as well, such as debt, weak productivity, there's political issues. So overall, we can sell the Canadian dollar. I, in my opinion, would say that this is one of the best shorting opportunities we've seen in quite a while, and I don't think it's really set in yet. So let's look at this objectively for a moment. What could we sell the Canadian dollar against? Well, as we should all know, our jobs as traders is to find the strongest and the weakest currencies, or the strongest and weakest assets, and essentially just trade them against each other. It's so simple. So we've already isolated the Canadian dollar. What is another currency that we are quite optimistic about? Well, we could go for the euro. That is an option. However, there are problems within Europe, so I'm personally not wanting to be a buyer of the euro right now. There is another option, which is the yen. So if we are expecting the Bank of Japan to continue their path to normalization as soon as this year, this October to be exact, we could absolutely look to be sellers of the CAD yen. Now, just a quick technical analysis overview. I've not done too much work in this, so this may change and evolve as time progresses. But just drawing the fib from the high to the low, we could look for a 50% retracement, we could look for the previous structure here to act as resistance once again, and then we could look to be sellers down to around 105. However, there is a lot more room for potential downside if we continue to see all of these catalysts lining up. So guys, hopefully this has been of some use to you. Don't forget to like and subscribe. You can join my Discord with a link in the description. You can get access to Market as well with the link in the description. If you join my Discord, you will get access to all of my live trades, including swing trades and scalps, as well as a whole community and education suite. I will see you very soon. Thank you very much for watching and stay safe.